Hey, before we start the video, do let me know in the comments, do you own HDFC shares or HDFC Bank shares? Let me know in the comments. Today morning at 8:30 a.m., a news came out that non-banking mortgage lender HDFC will be merging its wholly owned subsidiaries HDFC Holdings Limited and HDFC Investments Limited with its banking giant HDFC Bank Limited. It is very rare to see a parent company merging with its own subsidiary. In fact, this merger of HDFC into HDFC Bank will most likely make it the third largest business entity in India after Reliance and TCS in terms of market capitalization. And as far as share market numbers go, HDFC will acquire 41% stake in HDFC Bank, while HDFC shareholders will receive 42 shares in HDFC Bank for every 25 shares held in HDFC. Now let us quickly see 5 reasons behind this decision of merging two giants into one, and then you will know why the stock market reacted the way it did today. Number 1. Building a housing loan portfolio under the banking platform. With HDFC Bank being into the housing loan business for the past 45 years, their model is tried and refined at a huge scale. Now, HDFC Bank will benefit from their expertise of loan underwriting and mortgage financing to build a great housing loan portfolio under its own banking platform. Until now, HDFC Bank was selling the home loans of HDFC Limited while earning a fee in return. But the proposed merger will now allow HDFC Bank Limited to build its own housing loan portfolio and thus expand its existing customer base. Number 2. Access to low-cost funds. HDFC Bank, being India's largest private sector bank, has a customer base as huge as 6.8 crores. And this huge customer base gives them access to funds at very low cost because of automatic high levels of current and savings account or CASA deposits. Now, this well-diversified and low-cost funding base will only help HDFC Bank to offer more competitive housing products to their customers. Number 3. Creating large balance sheet. The merger will create a large balance sheet of 25.61 lakh crores, which is now closer to India's largest bank SBI with rupees 45.34 lakh crores. But HDFC Bank will now only benefit further from large balance sheet and net worth, allowing them to underwrite larger infrastructure ticket loans and thus boosting more affordable housing in the country. Number 4. Huge cross-selling opportunity. HDFC Limited has dedicated 445 offices of service centers across the country. So you see, these now will be used to cross-sell HDFC Bank's entire suite of banking products. Number 5. Reduction in unsecured loans. This merger will help HDFC Bank in reducing its exposure to unsecured loans. Although the exposure to unsecured loans was not that high, HDFC was growing its credit card and personal loan segment in an aggressive way because of the obvious high profit margins involved in unsecured lending. But this merged entity will now not only reduce its exposure to unsecured loans, but will also provide headroom to underwrite more loans. So all in all, this indeed is a merger of equals and a win-win situation for the entire HDFC group and its shareholders. Way back in 2015, HDFC chairman Deepak Parekh had mentioned in an interview that they could consider a merger with the HDFC Bank provided the circumstances are in favor. 7 years later, with the parent company now finally merging with the bank, the resultant entity will hopefully bring about a revolution in the Indian banking industry. So this was a quick video on HDFC Bank story. Normally you would see that our long form videos are nicely edited with proper animations, but since we wanted to release this video today itself, so we thought to go ahead anyhow. Hopefully you found this video helpful. If you did, give it a big thumbs up and subscribe to our YouTube channel for more such business related news, stock market, finance, case studies, so much more. Do subscribe to the channel, The Money Master. Until next time, namaste, bye bye and take care.